As a woman, I'm happy to say that many American single and child-free women are taking claim on their own finances. A mega survey done in 2019 by Federal Reserve Bank of St. Louis in US suggests unmarried women with no child have an average wealth of $65,000 while men about $57,000. Now, this data indeed shows women are getting richer, but what about Indian women? Are they on par with Americans? Well, from what I see, for instance, in my office, here itself, we have a maximum workforce of women slaying the day behind as well as on camera. So, how are women performing in the financial world in India? Let's get on board the founder and MD of LXME, an app dedicated for women to invest and become financially independent. It's my pleasure to introduce you all to Priti Rathi Gupta. Priti, thanks for joining in. Welcome to the show. First question to you, Priti. Be it a man or a woman, being financially fit is important for both of them. But why in India, as a country, we have to now give more thrust to women? For it is rightfully believed that becoming financially fit meaningfully translates into liberty and freedom in the truest sense.
Firstly, Kavita, thank you for having me here. It's always a pleasure to talk to you on my favorite topic. So absolutely, I think being financially literate, being financially savvy, and typically financializing your assets are important both for men and women. Now, what we've seen in India, and this is actually world over, is that men have always taken a lead, whereas women have tried to stay with more, sort of traditional instruments like fixed deposits or gold, particularly in India. Now, here is where I think a lot of things are changing. One, I think the way we live, our lifestyles, the dynamics, all of it is changing. Secondly, India as a country, we know that today financial assets or mutual funds, for example, have the least amount of penetration as compared to a lot of the emerging economies. We are looking at a 20% year-on-year growth to become a close to 1.3 trillion mutual fund market industry by 2025. Now, this can only happen when half our population, and actually a little bit more than half, for the first time in India, the women population is higher than the male population, when they start actively participating in these markets. I think women today realize, and this is a survey that we've done, where slowly the importance of managing the money is surely coming in. I think the big gap is managing, saving and managing your money, and eventually growing your money, which is really financialization of your savings.
Coming down to this report of yours, because see, financial freedom for women, especially in India, has been a grey area. The social conditioning of women as a decision maker of money matters at home has been long there, but sadly it didn't do much to improve personal wealth creation for women across age groups till 21st century. Now, what does Lakshmi Women and Power Report 2022 talks about when it comes to taking financial decisions, their awareness for investments and general thing about financial freedom?
So, Kavita, our report, actually the survey which was done for us by Access My India, covered about 4,000 women across metros, tier 1, tier 2 cities. And it was all personas. It was single women, it was married women, married with children, divorced, widowed, all of them, and working and non-working. I think very interesting data it showed 150% of women, which included even working women, were not aware of where their money is, right? The money that they've saved or earned. Where is it kept? Where is it invested? But even more disturbing was that 92% women were not even accessing any financial, whether it is website, news, or learning, all of that, right? Furthermore, I think we saw that less than 2% women were thinking about their own retirement. So when you talk of financial freedom, one of the things is that are you even keeping aside or creating a corpus so that you have or you reach that stage of financial freedom? So the numbers are actually quite alarming, quite disturbing. Having said that, the interesting data set was that women in non-metros, were actually far more savvy than women in metros. And one of the reasons for that is
Right.
that
This is
one,
very exciting. I want you to explain this bit because in tier 2, there were almost 29% of women who were surveyed, and in tier 3, we had almost 11% as a part of this survey. What are the highlights and interesting points that you can really highlight over here?
yeah. So, for example, we saw almost a 10% parity. So, for in metros, there were only 41% women who actually knew what their money was doing, whereas in the non-metros, it was close to 51%, right? And a lot of the reason for this, Kavita, was the fact that one, aspirations in non-metro cities were very high. Second, the availability of time. And I think I say this time and again, we talk about social conditioning. We say that, in our country, it's always been men manage money better. I think women also have a lack of time because they are doing so much, right? Multitasking, managing work, managing children, managing homes. The time to really study and go on to platforms for whether it is saving, online banking, whether it is investing, all their money needs is very little. Whereas, which is what we see in the tier 2 and tier 3 cities, that because of that availability of time and aspirations, a lot of women actually go and study and start making those investment decisions as compared to the metro cities.
About the women who were surveyed, how many of them were actually homemakers and working women? Because I'm assuming working women would still know things about investment and being financially independent when it comes to taking calls for their financial decisions. What about homemakers?
Kavita, that is actually sadly not the what the data tells us, because we surveyed 50% working, 50% non-working women, right? Working women actually had even less time to look after their money, and therefore it was always delegated to somebody in the family, and mostly a male member in the family. And therefore we found homemakers actually even more, because proactively saying, okay, this is my saving, what do I need to do with it, where can I put this money? Yes, the understanding of mutual funds or stocks, etc., or equity was very, very poor. The chosen method of putting their money to work was essentially fixed deposits or actually chit funds, far more than mutual funds, right? And this is very interesting. I think one of the things that Lakshmi, for us creating a platform and not being product specific, was taking into account the fact that women have this, there is a lack of time. So creating one platform where they can open bank accounts, where they can invest their money, where they can meet their borrowing needs of money, was actually part of the solution, and which is something that we learned from this survey.
How has been the response if I specifically talk about millennials, women millennials?
Again, I think the only difference between millennials and the baby boomers, etc., is essentially that they are more savvy digitally. So they are using payment wallets, they are doing e-commerce. So their comfort with an online money transaction is far higher. Having said that, even millennials, because we, for example, the age group that we spoke to in this survey was right from 20 to 45, and we didn't see too much difference in behavior. But actually, again, on the contrary, we saw millennials taking less interest, millennial women taking less interest in managing their money, because for them, I think money goals were not something, or financial goals were not something that they were paying attention to at this point in time. Savings were lesser, lifestyle spends were higher. But as they sort of started families, or they progressed in their age, financial goals sort of became important. And we saw higher active participation in the next, the generation above, as opposed to the millennials.
Let's talk about this very interesting study that I just mentioned. It's conducted in the US, which shows that women who are single and childless have more wealth than comparable men. Now, the number of child-free American aged between 18 to 49 foregoing children altogether has risen 7% between 2018 to 2021 to 44%. Now, according to experts, the rising cost of living plays an important factor in people's decision to have children. Do you see this trend any time expanding in India?
Kavita, by the way, there is stats in India also that the number of single women in urban cities, particularly metro cities, is rapidly increasing. right? And especially in the age group of 20 to 30. And I think this is a change that we will see. And therefore, I think it becomes even more important for women when they are single to manage money. We've seen this when we started Lakshmi, we surveyed women and we spoke to the millennials, the young single women, and typically that decision was left to the fathers to manage money, or the money was just kept in, bank accounts and not really put to work. So absolutely, this is something that will increase. I think the cost of education, by the way, and again, we did this study because for one of the biggest goals for women once they had children was child's education. Today, it costs about 70 lakhs averagely for a family to raise a child, half of which is education cost, right? And we see, therefore, even couples in, urban or non-metro cities, having lesser children because they want to give the best to the children that they have. And one of the things that we obviously will see going forward is, smaller families. It's already happening. So I see that trend surely coming in. And children's education and money for their higher education becomes like sort of the top primary goal for families, and I'm particularly talking of the middle income segment of our country.
Preeti, that's all for this discussion. Although we have a lot of topics to touch upon when it comes to women investing, but then unfortunately time is over. Thank you so much for running us through all of this.